Welcome investors and tech aficionados to the Monday edition of the Tech Stocks Daily Podcast. Buckle up as we dive into a bustling day on NASDAQ. Today, Marex Group is making waves with news on their upcoming financial results and investor event. Feeling app happy? AppLovin is stealing the spotlight with earnings soaring by over 116%. Meanwhile, Roku's stock has surged to a 52-week high, and its impressive momentum could have you rethinking your portfolio. And hold on to those shopping carts. Shopify's stellar earnings and partnerships with big names are heating up the market. Stay with us as we navigate these thrilling updates and crack the tech stock code. All right, tech aficionados, let's dive into why Marex Group plc is causing a splash in today's news. Marex Group, trading under the ticker MRX on the NASDAQ, just dropped a big announcement today that has analysts and investors buzzing. First up on their agenda, Marex is set to release its financial results for the fourth quarter and full year of 2024 on Thursday, March 6th, 2025. So, circle that date in your financial calendars, because it'll be hitting the news quite early, right before the market opens. Now you might be wondering, what's the deal with these financial results? Well, aside from the predictable graphs and percentage changes, they'll be laying out supplementary materials via their website. Translation? If you've got stock in Marex or you're just plain curious, you'll want to check out their investors section for a closer look under their financial hood. Moreover, Marex isn't stopping there. They're gearing up for a full-scale Investor Day event on April 2nd, 2025, in the ever-vibrant New York City. Imagine it, a day where analysts get to probe executives with burning questions, Montgomery Burns from Simpson style. Not enough for you? Marex is hosting a conference call on the same day as their earnings release at 9 a.m. ET. If you're an early riser or an avid number cruncher, you can register and join the call through their media server link. So grab your best analytical thinking cap and tune in with a latte in hand. For those of you unfamiliar with Marex Group plc, let's dip our toes into what they actually do. This global financial services platform specializes in delivering market access, infrastructure services, and that high-value commodity, liquidity. Their services span clearing, agency and execution, market making and hedging, to more tailored investment solutions. It's that strategic variety that sets Marex apart, providing their clientele coverage over 60 different exchanges. Marex is particularly renowned in major metals and the energy and agricultural products sectors, making them a significant cog in global commodity markets. Picture this. They serve over 4,000 clients, including some towering giants in commodity production, banking, hedge funds, and asset management. In 2023 alone, Marex facilitated some 129 million trades and cleared a mind-boggling 856 million contracts. Sheer volume. With its headquarters in London, Marex has a worldwide footprint, boasting more than 2,000 employees and over 40 offices distributed across Europe, Asia, and the Americas. So, while their financial results may just be emerging figures, they spell potential ripples across international markets, influencing investor confidence and share performance. To sum all this up, Marex is stepping into the tech spotlight confidently, inviting stakeholders to peek into their digital ledger. Whether you own shares or are merely window shopping in the world of stocks and tech, Marex's upcoming announcements promise some insightful, if not pivotal, revelations. Keep those browsers ready and stay tuned. Hey tech enthusiasts, ready for some juicy updates on your favorite app darling, AppLovin? The mobile app technology company has been creating waves in the market, and it's not just for its stellar earnings, but for its impressive momentum that seems to have caught the attention of analysts and investors alike. First up, let's talk earnings revisions. Analysts are singing AppLovin's praises, bumping up their earnings estimates like they're going out of style. The projections for the current quarter stand at a remarkable 45 per share, skyrocketing a mind-blowing 160.42% compared to last year. The company's full-year expectations are equally flashy with a $6.64 per share prediction, representing a strong 46.58% growth over the last year. Yep, AppLovin's earning growth seems to be living in fast forward. But what does this mean for investors? Zacks Rank, known for its superpower-like ability to predict stock success based on earnings estimate trends, has placed AppLovin right at the top with a #1 rating. This implies that investors might be in for a field day if they decide to jump on this speeding roller coaster of share price growth. And speaking of share prices, AppLovin is showing some serious momentum. It's not just happy to tag along, it wants to lead the charge. Over the past 4 weeks, AppLovin stock has bolted up by 49%, with both short-term and long-term trends gushing positivity. In a race where the Zacks technology services industry ran flat, AppLovin hit a full-throttle 1.66% over the last week alone. Moreover, when stacking AppLovin against the larger S&P 500, the company's year-on-year 752.06% rise in stock price looks like it belongs at the top of the podium, as compared to S&P 500's modest 23.81% gains. Long story short, while the world was tiptoeing through the market garden, AppLovin was sprinting towards the fruit stand. This dynamo isn't just about the numbers. Even its momentum style score from Zacks is waving an A for awesome. The success recipe here is cutting and dicing through estimate revisions. 6 estimates have boomed for the whole year in the past 2 months. Pair that with 0 downward estimates, and the promising path AppLovin's on doesn't just look good. It's practically irresistible to market players. For investors with an eye for a winner, AppLovin's making all the right noises. If you're looking to amplify your fintech adventures with stocks poised to soar, AppLovin might just be your next headliner. Ready for takeoff? Let's keep an eye out and see if AppLovin can keep riding this momentum wave or trade us a fresh twist in the near tech-happy future. Stay plugged in. Let's dive into the trendy world of Roku, the company that's been grabbing headlines for its stellar performance in the tech stock arena. If you've been following the financial waves, you know that Roku's been a hot topic lately. The company has managed to enthrall investors with its recent stock momentum and impressive financial metrics. Let's break it down. First off, Roku has been a momentum investor's dream come true. It's had a spectacular run, with a significant 30.5% spike over the past month, catapulting its stock price to a juicy 52-week high of $104.96. Talk about a streaming service that's not just hooking viewers, but also investors. Momentum investing is like being on a yacht that keeps catching the wind just right. If you buy high, you might sell even higher. Analysts are excited because Roku recently scored an A in the Zacks Momentum Style Score. Why does this matter? Well, for one, the company's been trading with impressive short-term price activity. Its current performance is not only soaring past its own past benchmarks, but is also leaving industry peers in the dust. While the industry was flat, Roku shot up by 2.71% over just a week, showing real buyer interest. But that's not all, folks. Roku's quarterly performance has risen by a whopping 43.17%. That's like hitting the business equivalent of a perfect 10. Dive into the pool of success. Over a year, it's spiking 37.6%, and its trading volumes are soaring higher than someone attempting to out-binge watch their neighbor. With a current average of nearly 4 million shares per day, anyone who's anyone in the investing world is probably feeling the FOMO with Roku. Now let's talk earnings. Roku's financial swagger doesn't stop at momentum. This ticker symbol has aced earnings reports, beating expectations consistently. Analysts have been revising earnings estimates upward faster than a caffeinated squirrel, pushing year-end projections from Midas 93 cents to a less scary 80. For the next fiscal year, expectations are equally promising, with an anticipated return to positive earnings per share. Valuation metrics do hint that the stock might be volleying near the lower. Are we getting a tad pricey range, since its value score is on the lower side? However, Roku's got A, scores in growth and momentum, singing sweet tunes of potential that could keep it running upwards. With its current Zacks rank of number 2, Roku is living at large, like the tech world's version of the star quarterback. It's doing everything from thriving in the consumer discretionary sector to topping as a favorable pick among analysts. In short, if Roku's journey were a performance, it'd be a blockbuster sold-out show, with encores ripping up the charts. Eyes peeled and FOMO controlled, because Roku might just keep streaming success into the minds of future investors. Hold on to your shopping carts, people, because Shopify is in the news today, and it's all about those dollar signs and innovative moves. So, why is this commerce giant catching the headlines and eyeballs alike? Well, Shopify is making waves by rising 20.7% year-to-date as of February, and has seen an impressive stock performance following its Q4 earnings report for 2024. Since posting some stellar results, Shopify's stock surged by 7% just last week, with both earnings and revenue numbers jumping over 29% and 31% year-on-year, respectively. That's enough momentum to make even your grandpa's flip phone start shaking in excitement. Investors and market enthusiasts are all eyes and ears because Shopify is oozing growth from expanding its merchant base. Thanks to merchant-friendly products like Shop Pay, Shopify Pay Installments, and the trusty Shop app, the company isn't just coasting along, but rocketing through the stratosphere with new and captivating features. And shopaholics unite because brands like Reebok and FC Barcelona are hopping onto the Shopify spacecraft. It seems the company is rolling out the red carpet across Europe and making commerce cuts on partnerships with names like TikTok and YouTube. Shopify's earnings boom isn't an isolated phenomenon, as they show plans including turning up the dial on artificial intelligence capabilities. Who knew that shopping for shoes could someday make us feel like we're living in a Black Mirror episode? And if your dog's favorite subscription box, BarkBox, is making more smug barks, it might have something to do with being on Shopify's platform. The future's looking bright for Shopify, with revenue estimates for 2025 set for considerable growth, and they even outmatched the broader sector's PS values, although that kicked them down to a low-effort value score of F for premium valuation alert. However, Shopify isn't sailing curt through blue seas just yet. They are kept on their toes by stiff competition and plans that may squeeze a little free cash flow in the near term. But fear not, excited investors, the Zacks commit, right to say number 3 Classma, jot down Shopify as a hold. Very much an indicator that playing the long game might pay off. So now it's up to you, viewers. Do you think Shopify's journey to the stars is innovative ideas? Young genius children? Do algorithm-led product combinations inspire more intricate office layouts? Share your thoughts below. I'm eager to hear your take, and whether you'll shop till you drop, or grab stocks like your discount sneakers. Let the comment shopping peoples parle. Écrire kami clad axis, la persistent clientèle prietan, skiberlance. Thanks to the Revoluziar Datos El Halmi, official feedback loop opening with a specified comment section, ungelaufen Sports. Alright, tech enthusiasts, let's focus in on Roku. With Roku hitting impressive highs recently, let's strategize on what you might want to do with this tech dynamo's stock based on the day's reporting. Currently, Roku boasts a stunning stock performance with a 30.5% spike in the past month, hitting a 52-week high and excelling in the short-term momentum game. Not to mention that coveted A in the Zacks Momentum Style Score is cause for attention, thanks to its jump in quarterly performance by a whopping 43.17%. And let's not overlook those updated earnings estimates, shooting from 93 to 80, indicating a potential shift towards profitability in the upcoming fiscal year. However, with valuation metrics hinting that Roku might be entering the more pricey range, the stock doesn't come without risks. It's important for potential investors to weigh this alongside Roku's current 2-inch Zacks rank, signaling potential continued success. Here's the play. If you're already holding Roku and have enjoyed the recent ride up, it might be wise to keep holding on to those stocks. Earnings revisions and positive momentum suggest there could still be ground to gain. Alternatively, if you've circled around the Roku yacht considering hopping on, purchasing now means buying into an upward trend, but with the caution of potential volatility, given the high valuation. Lastly, a gentle reminder, the world of stocks is as dynamic as your favorite movie plots. Always do your research and deliberate based on your unique financial situation, and possibly consult a financial advisor before riding the investment wave. With Roku seemingly both sailing and selling success stories, the finale could mean big cheers or a few tears. Stay smart and enjoy the tech show. In today's market roundup, we saw Marex Group preparing to dish out their 2024 financial results and inviting investors to keep an eye on their growth. AppLovin's is zooming ahead with jaw-dropping earnings revisions, making a splash with its momentum. Roku's riding high, hitting new records, and exemplifying serious investment vibes. Meanwhile, Shopify's got everyone's shopping carts racing with stellar earnings and innovative strategies. It's been quite a day, with tech stocks either soaring or solidifying their allure in the market. If you enjoyed our tech-tastic breakdown, don't forget to hit that like button, subscribe, and share this video with all your fellow tech enthusiasts. And make sure to tune in tomorrow for another dose of the latest updates and insights in the ever-evolving world of technology. Keep those screens refreshed.